Are you interested in working in venture capital? Maybe you have an interview at a venture fund and you don't know what to expect in the interview process or what questions you should prepare for. If that's the case, then you definitely want to watch this video because I'm going to review the handful of questions that I think are probably some of the most common and most important for you to prepare for. Over the last 14 years, I've conducted well over 1,000 interviews for jobs in venture capital. I mean, I run a program that brings in tons of interns and we teach them how to make venture capital investments, give them that experience, and then send them on their way. Many of whom will go and work at venture capital funds. So in this video, I'm going to cover the top 5 questions and I'm going to save the best for last. So make sure you stick around to the end. One of the most common questions that you'll get is, tell me about a deal that you're really interested in. Now, the venture fund or the interviewer is probably going to be testing you on a lot of different layers in this question. I mean, if you think about it, in order to answer the question well, you need to demonstrate a working knowledge of what is venture capital, the types of deals that VCs like and that are a fit for VC. They're also going to test you on your knowledge of what's really hot and cool in the market these days. Or another way to think about that is like, where are the undiscovered opportunities and what does the future look like, right? The other thing they're going to be testing you is on how well you know the firm, right? Is this the type of investment that that firm would make? Like if you walk into a fund that does enterprise SaaS and they ask you, hey, tell me about an investment that you think's really exciting, and you tell them all about this amazing new pharma drug that's going to cure cancer, that may be a really cool deal, but it doesn't match up with the type of investing they do. So they're also going to be kind of testing you on that element of it as well, which is why it makes for such a good question. My recommendation is, if you are like really passionate about venture capital and entrepreneurship, you should be out there. You should be talking to people. You should be reading articles and magazines. And you should already have in your mind a handful of deals that you think are really interesting and be able to articulate why they're interesting. You know, why they have the potential to not just be worth hundreds of millions of dollars, but potentially have the ability to become a billion or multi-billion-dollar company that could generate a huge return for the investors. Another question that often gets asked and is highly related to the first one is, what industry would you want to invest in? And like why that industry is the future and why VC should be spending time in that industry. The reality is like the best investments happen in industries that are typically nascent. They're really small markets, but they have the potential to become really big. Don Valentine, one of the godfathers of venture capital and the founder of Sequoia, has been known to basically say that at Sequoia, they don't invest in teams, they invest in industries. They go deep in terms of analyzing a market or an industry that they think is going to be very dominant in the future. And then from there, they identify the company that they think will win in that space. They're very industry and market driven, and that's very common for a lot of venture funds. They will build these like strategy maps and industry landscape analyses to help them figure out which company they should invest in. But in order to do that, they have to have an opinion on which industries are going to matter. Is it going to be crypto? Is it going to be AI? Is it going to be Web3? Is it going to be virtual reality? What is it? What's the next big thing? And once they've identified that, then they want to go in deep. And so you basically need to do the same thing, because you can't invest in everything. You can't be all things to all people. You'll need to hone in and specialize. And the more you specialize, the more information that you'll have and expertise when it comes to identifying which companies within a sector are going to be successful. And so being able to walk in and clearly articulate again what makes an industry really attractive for a venture capitalist will be really important. Sometimes you'll get case study type questions. We do these in our own firm. Ours are a little bit different than others, but those case study questions could be things like, they could be like technicals, like tell me the pros and cons of a priced round versus a convertible note versus a safe, right? And in that case, you want to make sure that you understand what each of those things are, the benefits and the cons of each one, and potentially be able to even like explain the math and the returns profile of each one of those. Another one that I think that is a really interesting case study question is if a VC lays out like a general startup and then challenges you to come up with terms that you would offer in the form of a term sheet back to the company. So they could come to you and say, I've got a business that is generating $3 million in ARR. The founder is a repeat entrepreneur. This is their third startup, and they've exited their prior two startups for pretty good valuations in the past. But this company has very strong customer concentration, as in 2 million of the 3 million in ARR is all attributable to one customer. And maybe this entrepreneur needs, $5 million to make it to their Series B milestones. What kind of terms do you offer? Well, in that case, you might say, okay, well, this sounds like a traditional Series A deal, which is right up our alley. And in that case, if the company's doing 3 million in revenue, if we look at current comps and similar valuations, maybe we say, I think this company could be valued at 10 times ARR. So that would be a $30 million valuation. But they have really high customer concentration issues, and that's a real big risk, because if they lose that customer, that could pretty much kill this entire business. So in that case, we're going to give them a discount for that. So maybe it's a $20 million valuation. But they are a repeat entrepreneur, and they've done this before. And so, I'm going to trust that they have the right relationships, connections, and know-how to navigate a lot of problems. And that really de-risks this investment quite a bit for me. So maybe I give them a bump on that too. So maybe that brings us back up to the $30 million valuation. Might also ask about what's their growth and their gross margins and those types of things. Are they selling to enterprise? Are they selling to SMBs? What does their customer profile look like? All those things could be really valuable questions that you could ask back and have really a conversation as you go through it. And then you might toss in things like, well, I would want a 1x non-participating preferred liquidation preference. We'd want a board seat. We'd want certain controls over the business. And so knowing all of those different pieces of a term sheet and where valuations sit today in the market could give you a real edge when you're trying to answer that question. And you can find the answers to a lot of those questions by watching more of my YouTube videos or by searching online, reading. There are some really good books out there, like Venture Deals, that will walk you through what a term sheet is and what all the different terms are. And then you can just look in the market on TechCrunch and Wall Street Journal and others to see what kinds of deals are getting done at what kinds of valuations. Preparing for these questions should be relatively easy and straightforward. They're knowledge-based questions, right? You go out, you do some research, you have a feel for what's going on in the market, and you can pretty much answer these. The last question, though, is not something that you can really do research on. It's more about who you are. But before we get to that one, let me hit question number 4. And that question is, why this role at this firm? And that's important for a few things, because at the very least, venture funds, for the most part, are small entities, small groups. They're not very many employees. And so when you bring somebody in to your venture fund, it's like you're bringing on another family member, right? Some of these funds, it's like 3 partners and an admin and a CFO and a couple analysts, right? So whether you're coming in as the CFO or the admin or the analyst or a partner, that's a small group. And they have to work together really well, and so they can be really picky on who they want to bring in to the fold. They're going to want somebody that is really excited, really driven, and understands who they are and what they're doing. This is why most venture roles aren't filled through a job board. They're usually filled by somebody that the venture capitalists already know, respect, and enjoy working with, which in of itself is a tip on getting the interview in the first place. But when you're answering that question, one, you want to make sure that you can explain why the role that you're applying for is really the right role for you and why you're excited for it. If it's an entry-level position, then you could talk about hey, I'm new to this industry. I want to learn. I want to grow. I want to hustle. I want to build a track record. And I want to drive real value to the firm. And maybe someday, if I'm successful, maybe I can generate enough value that you would see me as a potential partner. If you're applying for more of a partner position or partner track position, right? Maybe the explanation is hey, I really respect you as partners. I bring this incredible track record already that I've built up through my angel investments or prior experience in another venture fund. And being able to demonstrate that you are going to grow the pie by a lot more than you're going to take from it. And you definitely want to talk about why their firm. Nobody wants to be one of a dozen potential options. I mean, call it ego, whatever. Like, we want to be kind of catered to, personalized. We want somebody that says, of all the funds out there, I could pick any of them. I'm that good, but I'm picking you because you align with my values and my interests, and you are great people that I want to work with. So make sure that you can properly articulate that side of it as well, that you really understand the firm, you've done your homework, you've built relationships, and it's as much the role as it is the firm, as it is the industry that's driving you and attracting you to that opportunity. All right, so I said I'd save the best for last, so thank you for sticking around. Here's the big question, and this is a question I got when I interviewed with another venture fund. And it wasn't so much that the venture capitalist actually asked me this question specifically, but it came through in all the other questions, and that was, why do you want to be a venture capitalist? And here's the thing. I think in order to answer this question effectively, you need to be able to demonstrate that you have empathy and emotional intelligence in spades. Because great investors, especially great venture capitalists, are people with high emotional intelligence. They engage well with entrepreneurs. They empathize with the challenges of being an entrepreneur. They don't come at it as like, hey, look at me, I've got all this money, you should bow down and worship me, right? They look at it as like, hey, I am excited to be a small part of your success. We are partners. I'm bringing capital and hopefully some advice and mentorship, but you are the driver. You are the hero, right? Not the venture capitalist. And I think so often people that want to work in venture think about it in terms of like, oh, I could get rich. If I could just invest in the next Uber, I would be like, worth $1 billion. And certainly like there are opportunities to make a lot of money in venture. And other people look at it as like, it's a prestige thing. It's like, well, if I was a venture capitalist, then everybody would think I was super smart because I make all these decisions and I control the purse strings and blah, blah, blah. And really, it's just a continuation of an ego trip for me. Both of those cases like are not going to shine particularly well in a job interview at a venture fund. Contrasted with, I'm doing this because I love building things. I love supporting entrepreneurs. I love helping people. I get excited about learning and figuring out hard problems. And I'm not going to come in and do the job of the entrepreneur, but I want to be there right alongside them, helping whenever they need help and being that support, while simultaneously enjoying the fruits of the labors of that by generating great returns for our investors, right? Demonstrating some real empathy and emotional intelligence and an understanding of like where your place needs to be an effective venture capitalist. Anyways, I hope this was helpful to you. Let me know down in the comments what you thought. If you've been through a venture capital interview and you've gotten asked questions before that maybe stumped you or not, throw them down in the comments. Love to hear what they are, and maybe we explore those in the next video. If you enjoy this, make sure to check out my other video where I talk about how to get an internship in venture capital. It can be a great way to start your path.